for critical minerals is accelerating. Investment and infrastructure are not. Supply chains stretch across continents, across borders, and depend on power, transport, ports, and policy working in sync. Too often, they don't. Securing global mineral supply chains isn't any longer a question of geology. It is a question of geopolitics, global macroeconomics, international finance, focused on infrastructure, on cross-regional collaboration, and on risk sharing. And that is the focus today of this first panel. Two of my panelists have already joined me here on the stage. And let me introduce now onto the stage the other four panelists today. His Excellency Mohammed bin Abdullah Aljadaan is the Minister of Finance for Saudi Arabia and serves on the World Bank's Board of Governors. Thank you, sir. His Excellency Luis Watum Kabamba is the Minister of Mines for the Democratic Republic of Congo. Please join me on the stage, Your Excellency. Audrey Robertson, at the end here, is the Assistant Secretary of Energy overseeing critical minerals for the United States. Thank you. Valerie Levkov is the Vice President for Infrastructure at the World Bank Group. And my other two guests today are Gustavo Pimenta, who is the Chief Executive Officer at Vale, and Scott Brison, who is the Vice Chair of BMO Wealth Management. Can you all join me on the stage in a round of applause, please? All right, well, His Excellency set us up for what is going to be a fantastic couple of days at a time which couldn't be more important. I have to say to the Minister and to you, Sir Mabruk, on what is the third edition of this event, bigger and better every year, in no small part to the efforts by Saudi Arabia and the team involved in this. So a huge congratulations to them. Mohammed, can I start with you? The international macro policy context in 2026 is complicated, to say the least. It has and will continue to have a huge impact on extraction industries and their host economies. So let's start with this very simple question. What can the mining industry expect in the coming year, and how should it prepare and respond? A very simple question to you, sir.
Well, thank you very much, Becky, and thank you, Your Excellency Bender, and thank you everyone for being here. Welcome to Riyadh and welcome to Saudi Arabia. Well, I'll try to be as brief, so it will only take me about 30 minutes to respond.
We've only got 37.
Yeah, I think the global, generally, if you look at the global economy, we are facing multiple dynamics. I would not say even challenges, but we have a sluggish growth, uneven growth around the world. We have an environment where interest rate is actually still high compared to a few years back, while we have seen an easing on the monetary position, but still it is very high compared to a few years back. And as important is the geopolitics, which creates a lot of uncertainty. And in an environment where a sector like this, which needs a lot of uncertainty, it's a long-term investment, it's a long-term cycle. You really need a lot more certainty, a lot more stability, a lot more predictability. And I think it also provides opportunities. If you do it right as countries or as investors, I think there are a lot of opportunities that this current environment provides. Because currently, minerals are seen by a lot of countries as a serious national or at least economic security issue. And that would provide opportunities. That would provide opportunities in terms of partnerships with host countries or even third-party countries. But still, you will need a lot of discipline. You will need to make sure that you are dealing with this in a very disciplined way. You choose which countries you invest in. You choose which minerals you invest in. And you are looking at this at a very difficult time, whether it is geopolitically or economically. That said, just what to expect, I think we have seen the start of what we should expect in 26. And in an environment where a sector like this, which needs not only what is going to happen in 26, it needs to see what's going to happen in 2040. I think credibility, predictability, certainty is absolutely critical when making that decision.
You could argue that much of what you've just said, predictability, certainty, is lacking at this point. So it is a challenge. Saudi Arabia positioning itself not just as a player, but as a platform. You're bringing producers, consumers, and capital into the same ecosystem. From a finance minister's vantage point, very briefly, before I open the floor, what's the most critical gap in today's global mineral supply chain?
Well, I think a few things. For an industry like this, I think what is happening today will seriously impact demand, and His Excellency spoke about this, will impact prices, and will impact how to attract capital. And to me, if you find an environment where countries have more stability, very clear policy positions across the political cycles. I mean, we don't have the political cycles that democracies have, but you will need to look at that very carefully. The countries who will actually take a long-term view in their mining policies will be winners when it comes to investment opportunities. And then you will need to make sure that as an investor, you bring a value to the nation. You know, this is not an extraction play. This is actually a very long-term prosperity, sustainable play that will need to yield results for the investor, but also for the host countries.
Let me bring you in, Audrey, if I can, because off the back of His Excellency's comments, critical minerals are a matter of national and economic security for the US, a stated position by Donald Trump as he took on his second term back in January the 20th last year. So we are literally just less than or shy of a year in. We see the evidence of that in Venezuela, the wider Americas, Ukraine, the DRC. I'm going to come back to the DRC. Greenland, J.D. Vance hosting meetings with Danish and Greenlandic officials today. The US president says, for example, he needs Greenland for national security. Briefly, because I'm going to get you to lay out the sort of position of the United States on critical minerals. Greenland is a critical minerals file, right? Correct?
Well, thank you for that. And first, I want to thank our gracious hosts, Your Excellency, and the Kingdom for putting this event on and inviting us to come participate. I think the evidence of all of the nations gathering here indicate the global importance of critical minerals and the fact that the solution will be global in nature. So I appreciate the opportunity to be here and happy to speak to the United States and our policy. As you said, a year ago, next week, President Trump in his inaugural address announced a bold energy dominance agenda. That agenda is meant to secure America, secure our manufacturing, energy, not just for national defense, but energy underpins every economy. Secretary Wright has been here several times since he took office, and energy is everything. A nation, the Kingdom of Saudi Arabia and the United States, I think, agree on that. As it relates to critical minerals, I would take our president at his word as it relates to Greenland. And I'm not going to necessarily comment on ongoing issues around that, but the president has been decisive in protecting American interests and protecting the interests of our allies. We signed a landmark agreement with the Kingdom just a few months ago around critical mineral security. And this is, as was His Excellency just said, this is a capital-intensive industry. And to be successful, you have to have long timelines, you have to have strong partnerships, and you have to have the ability to invest across borders around the world and with partners you can trust, or this industry will not evolve to where we all need it to be to power the world.
So you lead the DOE's Office of Critical Minerals and Energy Innovation, where you oversee one of the nation's largest energy R&D portfolios. You also, and I'd like the audience just to be clear about this, you also last year sold the largest ever oil company founded by a woman, and one of the largest in the United States, Mabruk, as they would say in this region, or we would say in this region, for that. With the focus of this panel on investment and infrastructure and the value that host economies must derive from inbound investment in order for the industry to prove valuable for society going forward. Can you just lay out the US critical minerals strategy and speak to the emergence of, for want of a better term, what looks like the emergence of this strategic sovereign wealth fund underpinning that strategy?
There's a bunch of questions in there. I'll try to address them very briefly because I would really like to hear from some of my colleagues too. The energy dominance agenda required bold changes to the way we permit, the way we invest, the way we use taxpayer dollars. And that's both with my colleagues at the Department of War, the Department of Commerce, the Department of Interior, how we are making strategic investments. And yes, some of them are in equity form, but the equity form isn't an underpinning of a sovereign wealth fund. It is a mechanism to deliver value for American taxpayers, which is a promise our president made. And in many cases, the most important and strategic way to partner with private industry. Our partnership with the Kingdom here and with MP Materials is evidence of just such a three-way partnership where private industry, multiple governments come together to solve a problem as it relates to refining. You asked about our R&D portfolio. The United States has a great privilege of investing across 17 national labs and our desire to be the global leader in innovation. We've done that in many industries, and we will do that in critical minerals and processing as well. My office alone has committed over $1 billion in the last several months to driving forward innovation from mining, upstream mining technology, to refining, processing, metallurgy, and we will continue to do that at an unprecedented pace on the innovation side.
I want to come to the Minister from the DRC momentarily, but I am just going to sort of close out this part of the conversation with you, Audrey. That recent deal struck with the DRC on critical minerals has been described by critics as lopsided. Does this kind of, and I want to put this criticism to you, sir, as well. Does this kind of deal-making, does it worry you that at best it can create mistrust with other global partners? And we are seeing that around the world. And at worst can look like strong-arming nations into caving on portfolios or investment deals that may not provide the value that these host economies need going forward.
The United States seeks to have great partnerships where we all bring different things to the table, and partnerships are a two-way street. There's no strong arming. There's only strategic alliances to better our nations and better the world.
Interesting. All right. Well, thank you. Minister, let me bring you in. McKinsey's latest Global Institute report outlining the decline in the value of mining deals in Africa over the last 5 years compared to what has been a more than tripling in LATAM over the same period. Countries are racing to tap this demand. Risk perceptions continue to weigh on Africa, despite its vast reserves of critical minerals. I wonder how you are addressing that investment challenge in the DRC. Part of how you are addressing that recently was the emergence of this deal, this accord struck with the US. And so I wonder how you also address those critics, both internally and externally, about a deal like that.
Yeah, no, thank you very much, and it's good to be here. And thanks again to the organizers for this fantastic forum. You know, let me say one thing. Africa, and the DRC in particular, are making a great effort to improve on governance, on issues such as predictability and security of tenure and you know, traceability and others. And these are real efforts, and strong reforms are being made as we speak. We're part of a number of initiatives like extractive industry transparency initiatives. We're part of many other initiatives to prove that we are getting the business climate in the right place. And efforts are paying already. There's still a lot of misconceptions and wrong perceptions, perhaps because DRC doesn't communicate enough. But let me tell you, as we speak now, DRC is home to a number of multinationals, such as Glencore, Ivanhoe Mines, Barrick, CMOC, you name them, all totaling over $45 billion investment today as we speak, and even crying for more to pour in DRC. Just a couple of months ago, Ivanhoe Mines commissioned the biggest and most modern direct to blister smelter, 500,000 tons capacity for nearly $750 million investments. And more investments are rolling in. So I'd rather invite people who are still doubtful to do their homework. And homework means only one thing. Understand the regulatory framework first. Understand how the administration works, because these are your best allies, after all. Your best ally is not President Felix or myself. No, your best allies are the laws and regulations of the country. They give you security of tenure. They protect your investments. And the administration gives you all the paperwork you need for you to deploy your business plan with military effectiveness. And this is happening as we speak. So I invite people to come to the DRC and see for themselves what it is.
Well, the US is certainly, and you've been in the mining business pretty much all your life, so that you've forgotten more about the mining business than most people around the world will ever know. So it's great and massively valuable to have you on this panel today. The US has seen an opportunity, a big opportunity in the DRC. DRC being accused of giving away too much for too little. How do you respond to those criticisms?
It's not true at all. Let me explain one thing. When we signed the deal in December in Washington, it was not about selling our resources for nothing. It was a framework. We agreed to sit down and do business. And we made it very clear to the US. We have laws and regulations, we have expectations, and it's got to be a win-win partnership. Sure, we have critical minerals. In fact, the DRC has a mineral endowment second to none on this planet, let's face it. But DRC also needs to beef up its defense, insecurity, and others. So there's a place where we can sit down and talk and get a win-win sort of partnership. We are sending this week to the US a list of strategic projects where the US can invest. And it's going to be, strictly speaking, commercial discussions. And it's not going to be like we're giving it for free, not at all.
The lens for this panel is very specifically investment, which we are discussing, and infrastructure. And I do just want to close out this part of the discussion by asking you how you convince investors that these sort of regional dependencies, cross-border transport, power, and logistics networks can be managed effectively, and what more, how big a challenge is that, and what more needs to be done. We've got Valerie here who will speak to the World Bank's sort of strategy on infrastructure. I want our other two guests to speak to the importance of strong cross-border collaboration and infrastructure. But I wonder, again, given your experience in the industry, you haven't come to this position as minister without an enormous amount of experience. So you will have faced these problems with cross-border dependencies and the lack thereof of infrastructure over the years. What are your thoughts?
Yes, you're very right. In fact, deficit in infrastructure is costing a lot in terms of mining cost. Nearly 30% of your operating cost will go into logistics. So we got a real challenge there. Same with energy. We have a deficit in energy of over 1,000 megawatts. But again, DRC is a country which can power the whole of Africa and part of Middle East, over 100,000 megawatts that we can produce in DRC. It's a matter of having a long-term plan and taking it bit by bit. And this is exactly what we're doing now. For now, we're importing power from neighboring countries. That comes with a premium. But the plan is clear, to beef up infrastructure in electricity, in roads and railways. And I know many people are thinking of the Lobito corridor, where we have to send our mineral products via the railway, going through Angola. But many people tend to forget that DRC also has access to the sea directly. So that's also another option we're looking into as long term. And I don't think financing all this, when the country has a mineral endowment over $25 trillion US, I don't think it's too difficult to raise the finances for that. And again, it's a very resilient industry. We crushed it down to nothing from, that was in the late 80s. From 500,000 tons down to almost 10,000 tons only. And from there, we did all the right reforms. A fantastic remontada. We went to 1 million tons per annum of copper. And ever since, we've been going up and up and up. We just crossed the 3.5 million tons last year. And we'll keep cruising up again.
You talk about the enormous natural endowment that the DRC has. Gustavo, you assumed the position as CEO of Vale back in October 2024 after a pretty tough period for the company, and you launched your tenure with an ambitious vision to reclaim the company's position as the world's premier mining company. You said at the time it has to be the biggest mining company in the world because we are sitting on the biggest mining endowment in the world. So, there are a lot, it seems, of the biggest endowments in the world. Everybody's very proud of its opportunity around the world, but certainly Brazil has, an enormous opportunity. I know that you and Scott are likely wanting to stress the need for collaboration across complex transcontinental supply chains at this point. So from both of you, and let me start with you, Gustavo, what are the biggest challenges from your perspective?
So first of all, thanks, Becky. Salam alaikum, Your Excellencies. Thank you so much for having us again. It is so important. I think we have a good problem to deal with, because if you ask around in the industries, one of the challenges that most of the CEOs will face is on the demand side. Are you going to have enough clients for my products? We don't have this problem in this industry. We are going to have to grow by a factor of 5 to 6 times the amount of supply to be able to do all we need in terms of energy transition, in terms of AI, and so on. The issue is indeed on supply. As a miner, I think that's probably where we face the hardest issue. It's taking longer, it's more expensive. There is an overall degrading of the systems. The good ore bodies are being exhausted. We have to go for lower quality deposits. This is just a reality. So it's fundamental that we work very closely with our clients to be able to accelerate and really be able to bring those volumes at scale. So we have to work with governments, speed up, for example, licensing process. It's taking a lot longer than it should. We miners have to also do a better job in terms of how we bring projects online, improve engineering. being able to bring new digital tools, work around circularity, make sure that we reduce the footprint of our operations. One of the biggest challenges that certainly impacts our ability to bring projects online is the fact that society still has a challenge regarding mining. It's still perceived by society as a challenging business. And we have to be able to show that we can do a different mining of the future, that it's more digital, that has less environmental footprint. For example, at Vale, we talk about zero waste mining. In the future, we should be able to use 100% of your waste for byproducts, for other things. We should be able to do more circular mining. We are doing almost 10% of my production today. Vale last year resumed its position as the largest iron ore company globally after 6 years. And we're very proud of that. And 10% of my production today is coming from circular mining. I'm just reprocessing, for example, ponds, where in the past I just put it there as a waste. I'm going back to those ponds and saying, well, those tailings actually have good quality material that at the time we're not able to process. So with new technology, we can now process lower costs, quicker time to market, and our ability to then serve the clients is super important. So this is on our side of the mining industry. But also, to your point, I think collaboration with end customers is super important. I see the mining community evolving to be more decommoditized. I think that's a reality.
What do you mean by that?
I think clients are requiring more fit for purpose, more customized solutions. And I think miners have to understand that. We will evolve as the energy industry evolved to be able to supply more customized solution. And one good example that I like to talk about is the partnership that we have here in Saudi Arabia. So we've been looking with the kingdom in the ability to deliver a low-carbon steel industry, accelerate that future. The U.S. has a footprint that has already a low-carbon steel industry based on natural gas, that the U.S. has a lot of natural gas, the kingdom has. We see a future where steel is going to be produced, for example, in locations where we have access to competitive natural gas, in the future potentially hydrogen, and this is going to allow us to decarbonize in an economic way. I think this narrative has evolved in the last couple of years where people were just pushing for decarbonization. And I remember we were the ones saying, we are not going to decarbonize any industry at any cost. Clients are not going to pay for it. That's a reality we are all facing now. But it is possible indeed to decarbonize using competitive solutions, such as the one that I talked about. Yeah. So a partnership between an upstream player like Vale, that has the highest quality iron ore in the globe, with, for example, a downstream player, clients that are willing to develop new clusters in places like Saudi Arabia. We're discussing this in other places as well. And this then becomes a hub for HBI, for low-carbon steel to supply other markets. I think that evolution of the supply chain requires a tremendous amount of partnership for us to be able to develop.
Scott, Canada has identified more than 30 critical minerals.
Yes, that's right.
And is positing itself as a reliable supplier. I just want to get your perspective on investment, infrastructure, the importance of collaboration, and whether your country of Canada can deliver on those goals.
Well, firstly, Canada is deeply experienced and has been for a long time in mining. Canada is a mining country, and we see our partnership with the Kingdom of Saudi Arabia very much foundational around mining. The ambition of 2030 for Saudi Arabia's mining industry is one that we have great optimism and belief in, and to which we bring a great deal as a country that historically, going back to before our confederation, mining has been central to our country's economy and to our country's society. And we have in our Prime Minister, Mark Carney, a globalist leader with a great ambition to develop our economy and diversify our trade relations and to build our mining industry. I want to say one thing that's very important. We're all here today because the Kingdom of Saudi Arabia has gifted to the world the FMF. This, in a very short time, 4 years, has become the Davos of mining. No other country in the world,
including Canada, which has a big platform itself, of course.
Look,
yes.
No other country in the world has the ability to bring together 100 countries, government and business, not just countries like US and European countries and Canada, but African countries, and a history in Africa built on trust and relationships, and Russia, and China. And I happen to believe that it's a good thing when people meet. And there's very few countries, in fact, there's only one, and that's the Kingdom of Saudi Arabia, that has the trust of enough countries to convene at this critical time when multilateral institutions, the Bretton Woods institutions, which are very important and we need to defend. But Saudi Arabia is leading, and Canada is a proud partner with the Kingdom of Saudi Arabia, and you're going to see that partnership deepen. BMO, our bank, is the top mining bank in the world. Now, when I say this is the top mining conference, FMF is the top global business and government mining conference. The BMO conference at the end of February in Florida is the top banking finance mining conference still. But FMF is really important, and the kingdom is really important going forward, building a multilateral approach to an important global industry. We're going to need more conversations, not less, more trust, not less, more respect for other countries, not less, and more partnership, not less. And the Kingdom of Saudi Arabia gets it, not just in terms of public policy to develop their domestic mining industry, but they have an understanding of the world and the trust of the world at a critical time. So right now, my friends, we need to partner, and Canada is absolutely shoulder to shoulder partnered with Saudi Arabia.
Can I ask you the question then that we started this panel with His Excellency? What you believe the most critical gap in today's global mineral supply chain is from your perspective?
Well, look, when we're looking at one of the things with critical minerals, the overall objective, in some ways, electrification as an example, stems from a global objective of tackling climate change. The current geopolitical situation, the decline in multilateralism, the polarization we're seeing in the world, the balkanization of efforts to tackle climate change have not been helpful. So number one, I think more working together and finding ways in this erratic global environment to do so is going to be absolutely critical. Number two, I think from a pricing perspective, countries, and Australia has moved on a price floor backstop. I think you're seeing that in other countries. Canada is looking at and developing that, and we have a parliamentary secretary to the Minister of Energy and Natural Resources, Claude Gay, with us today. But Mark Carney is developing those kinds of public policies. We want to develop those public policies not just in Canada, but we want to play a role in helping other countries shape them so that we have a similar approach, that companies like Vale can actually depend on some level of consistency in countries where they work and where investors deploy capital. So it's important what we do in our own countries to advance critical minerals, but it's also important what we do with other countries.
And that brings me very neatly to the World Bank group. The World Bank's new metals and minerals strategy puts infrastructure front and center. I just wonder if you can just briefly walk us through that decision and how the World Bank will help ensure equitable growth for communities, not just, as some would suggest, destruction around communities. So let's just start with the sort of, financing remains a global mining challenge. So let's talk very specifically to the strategy that you have developed, and one of the key pillars of that strategy being infrastructure.
Thank you. So I will be direct to the point. Our mandate is clear, is to support mineral-rich developing countries to get benefit from their resources by better development, sustainable growth, job creation, and benefit to the population and local community. That's our mandate. We have presented to the board a strategy which has been approved, which has 3 pillars. The first one is to support on regulation and policies, to have a better framework for long-term investors to come in. Second, and we'll come back on it, is to support investment for infrastructures. Our observation and experience, we have 60 years and more than 60 years of experience in the mining sector, is that the lack of infrastructure in developing economies is one of the main pinpoints for this industry. So one of the pillars will be to develop roads, highways, airports, water, energy, all of that to support the mining industry. And by the way, the mining industry can be an anchor for this infrastructure to be developed. And the third part, and we discussed that during the roundtable, ministerial roundtable yesterday with the minister, is also to mobilize more private capital. We will need huge financing. So it will come from us, but also we need to attract more private capital. That's the 3 pillars. And this strategy is intended to grow our support to the countries 5 times within 5 years. So it's a big, from us, commitment to the countries to be there. And that will be done in partnerships with the countries, with the developers, industry, with the civil society, and the financial community. So that's in a nutshell our strategy, and we will do and action it now. We have no time to wait.
I can see that as a vision. I just wonder whether you can be a bit more specific about the strategy and the key milestones here, because it's obvious to a degree. It's very clear what the where the kind of sweet spots are, why infrastructure is so important, and the strategy that you put together here. But I don't hear, how you make that effective very specifically.
Yeah, because to grow 5 times in 5 years, we need to be very specific.
Yeah.
We are engaging with the countries to do compacts with them. What is it? It is about being more holistic and not point to point. We'll go to each country and do a roadmap and analyzing what is needed in the 3 pillars and bring the solutions. That's first. And we start with these compacts. We intend to do more than 20 compacts in parallel now. Second, on infrastructure, back to what we just discussed this morning, we engage also a systematic approach to infrastructure in each country, to really do a programmatic approach. So it's really moving from a case-by-case to a more programmatic approach. And I would say third part is with FMF, we have started already to work on, it's an early stage, on new financing tools. to support this strategy. How to bring together the partners, how to do private plus public financing, blended approach.
In the spirit, and this is a 20-second response from all of you, I'm going to go zip down the line. In the spirit of the theme of this panel, people plant trees in whose shade they will not sit. 10 years from now, Your Excellency, will we measure success by tons produced or by development delivered?
I think you have to do both. You will need actually to do both, and doing it just by the extraction and the amount is not going to work, and it's not going to be sustainable, and it's not going to be there for the long term. It will need to be the quality, it will need to be the prosperity, the sustainability, and what matters for the country and the even community around the industry that would actually count, that would last beyond these projects and beyond us.
Luis.
You know, today the world is producing 23 million tons of copper. When we get to 2040, the world will need close to 40 million tons of copper.
I think in 10 years, we're going to look back at this period and see the greatest wave of trade liberalization in our lifetimes, which is counterintuitive today because of what's going on in the U.S. But what is going on in the U.S. is a wake-up call to the rest of the world to bring down trade barriers, to work together, to partner, and this time in terms of globalization, to make sure that we share the prosperity within our countries and we bring the people along with us so that they understand the importance of liberalized trade and globalization, and we earn their support. We've got an opportunity to do globalization, free trade 2.0, and this time we better get it right in terms of bringing society with us.
Your 20 seconds went on a little bit there, but thank you, Scott. Gustavo.
Look, I believe what we do to make people's life better. And I think that's the measurement of success for me and my team. We touch on communities every day. I want to see those communities prospering, because if they are doing well, it's because my business is doing well. So that's the goal.
Audrey, and I'll come back to you, Valerie, as a closing remark. Audrey.
I think critical minerals are not the endpoint, they're the enabler. And critical minerals are the input that is essential to energizing and powering the next decade. And I think we all see that, and that's why we're here. But that success will be not having that be the element that slows down advancement of societies. It's just like power. If you have lots of electricity, you don't talk about it. If you don't have electricity, it is the biggest challenge to your life. And we hope that nations across the world all come up with this development and this global approach to fixing this problem.
Valerie.
So for me, within 10 years, it should be systematic to have responsible development, strong safeguards, local community, clear benefit, because for us, all of that are non-negotiable.
An inspiring set of closing remarks. Ford has been a fantastic panel, very enriching. Your analysis and insight, so important. Thank you so much, and thank you for listening.
Thank you.